Jay, when you agreed to do this interview, you didn't realize that the markets were going to tank on Monday and the futures are going to be down 200 on a Wednesday. What are you advising clients to do right now, given the sort of the recent concern, given that manufacturing data yesterday?
Yeah, current clients are just very locked up right now. They don't really see a lot of opportunity out in the markets, so we're advising them to get a little bit more defensive. You know, we like quality names that are more profitable. We like looking at the preferred space where you're getting out of traditional equities into something a little bit more fixed income. But we're advising people to pull back and be more defensive in this kind of environment.
How do you invest in preferred stock?
You can invest in an ETF, which provides access to 300 preferreds in a single trade. That's really one of the most efficient ways to get that exposure.
And how do you know what you're getting?
You can look under the hood. So ETFs have to disclose their holdings every single day. So you can see exactly those issues that are going to be in a preferred ETF. A lot of them come from the financial sector. But if you look at financials right now, growth is slowing, but these are very well-capitalized banks. So we don't see them having any credit issues. We just don't see a lot of growth, which we think is great for preferreds.
Okay, you're also recommending fintech, financial technology. It's been hot, but most of us are not venture capitalists who are able to get into, the Series B round. How can our viewers invest in fintech?
Sure. So fintech has a very liquid public market. So, we often think of, the hot startups, the unicorns, but there are a lot of these startups that have IPO'd, companies like Square and PayPal. We have access to that in our fintech ETF as well. But this is a fast growing space. And this is a space that we think can continue to grow even if the overall economy is slowing down, because they are just starting to take over areas like digital payments, peer-to-peer lending, and crowdfunding.
Yeah, and thematically, electric vehicles, people believe in them. But again, one of these things where it's like, okay, I like electric cars. Maybe I drive one, but how do I make money off them?
Yeah, exactly. So only 2% of cars sold last year were electric. So this is just the tip of the iceberg. But one of the areas we like is looking at the battery producers. These are companies that are building batteries for your iPhone, your iPad, and electric vehicles. Electric vehicles use about 10,000 times as much lithium as a cell phone. So it doesn't take that many cars on the road to really move the battery and lithium markets.
Yeah, okay. Jay Jacobs, I appreciate your time today. Global ETFs, thank you very much for joining us.